Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin, and I'm back with another video. Guys, in this video, I'm going to be showing you how you can properly use the Fibonacci tool, right, to be confluenced within the Power of Three method, guys, what I've been showing you, right, in my previous videos, how to attack the market, right, the proper way, to make it a bit more simple for you guys, right? But I'm going to be showing you how you can use the Fibonacci tool, right, to your advantage, right? Especially when you're using it on whether it's a smaller time frame, higher time frame. It doesn't matter as long as you're following the method in itself and the principles behind it. Everything else is going to fall into place. All right. So right here, if we're looking at the market, we can see that the market, of course, created a double top. From that point, the market started to trend towards the downside. All right. Now, here's how you are properly supposed to use the Fibonacci tool. All right. So when you see price create a low and then price goes and takes out that low, right? Whenever that happens, that's showing you that the trend, of course, is looking to change, right? So now it creates the low. When price creates new lows, it looks to retest. All right. In this case, this is the lower high. This is the lower low. This is the lower high, right? So on and so forth. Now, what I'm going to do, right, when you find the Fibonacci tool, it's usually going to be on the third column, right? And it's going to be the first one up there. You click it, right? This is how I have my Fibonacci tool laid out. I want to show you before we get started. So if you need to take a picture of this, take a picture now. But these are the boxes I have checked off with the numbers that are given here. All right. So if you need to take a picture, do that very quickly. 5, 4, 3, 2, 1. Boom. All right. Now, when I grab on Fibonacci tool, and I know that this is my lower high, right? This is my lower high. I take it down to my lower low, where I see price starts to retest. Okay. I see price starting to retest from this point. What I notice is, right, there's a three areas of values. There's order blocks, there's fair value gaps, there's structural levels, right? And what you're going to notice is when price retests, it's always going to find its way back to not only a discounted area, but it's always going to find its way back to an order block, fair value gap, right? Our structural level, which is our areas of values, is either going to find its way back to a fair value gap, structural levels, right, and order blocks. Those are the levels. Now, in this case, this is the last up candle before price cleanly broke structure, which gives us our order block. And if we look at that, right, from wick to wick of that buying candle, right, that is a order block candle. All right. When price created that new low, it retested back to that level. All we need to see now is price closing beneath it. Right. We get a bearish candle closing beneath the zone. That gives us our entry. Right. Naturally, when we are trading, it depends on what pair you're trading as well. But if I'm trading like majors and minors, my pip count ranges from 35 pip SLs to 75 pip SLs. Right. So you just have to kind of go with what the flow of the market is giving you. Of course, we want to make sure our SLs are above our areas of values. It gives us room, it gives our trades room to breathe. We take our entry, and as we see, right, we at least want to go for a 1-to-1. But if we want to go for the whole swing, right, we go all the way down to the 0.27. All right, that gives us a 1 to 2.5 risk to reward ratio, right? A 1 to 2.5 risk to reward ratio. Our take profit gets hit, we make our money, we go about our day, right? Now, let's go and look at some more downtrend examples, right? And we can go even on other pairs, right? Doesn't matter. Same things apply, right? We can go on a whole different pair here. Let's see. All right. Um, yeah, let's go to US. Let's go to, I'm sorry, guys. Hold on. Let's go look at, I bring it up twice, but let's go to UCAT, right? We're gonna look at UCAT. As we see here, UCAT is clearly moving where? In a downtrend, right? UCAT is clearly moving in a downtrend. It's consistently creating, right? Lower highs, lower highs, lower highs, lower highs, right? Prices continuously falling towards the downside. What I notice is, of course, right, price is structurally breaking towards the downside. Price is structurally breaking. towards the downside, right? If that is happening, right? If that is happening, that's letting us know that price is most definitely wanting to move towards the downside, of course, right? So we have our lower high to our relative lower low, right? So what do? We grab our Fibonacci tool from here to here, right? This counts as a discounted level. The 1 counts as a discounted level. The 886 counts as a discounted level, of course, so on and so forth, right? From 38.2 all the way to 1. Okay, because when you think about this, this becomes a structural level, right? No matter how you look at it, that is a structural zone, and price has respected this structural zone. We got bearish candles closing beneath, right? So if I'm looking at this, I want to take my trade from this point, right? Of course, I want to have my SLs above my area of value, at least at 50 pips, right? That gives me an opportunity to have my trade give room to breathe, right? And of course, I at least want to go for my 1-to-1, right? 50 to 50. That gives me my 1-to-1. Now, if I want to go for the full swing, that puts me in a position to get a 1 to 3.6 risk to reward ratio, right? Just paying attention to the market, looking at what the trend is telling you to do, right? Boom. Price does that one, right? Now, what ends up happening? This becomes our lower high. This becomes our lower low, right? Price breaks structure here, continues to fall towards the downside. When it decides to retest, right? You got to ask yourself, where is it retesting to? All right, this is my relative lower high. Boom, taking it all the way down to my relative lower low, right? And if we look at this, right, this level that we have here is an order block. This is one of the, I'm sorry, not an order block, it's a structural zone, right? From this wick, right, to here, right? From this wicks all the way to the bodies of the candles. All right, that gives us a structural zone, right? Price retest to a structural zone. Now, what ends up happening? All we need to see is bearish candles closing beneath the zone. Once that happens, right, right, you have more than one opportunity to get into this trade. So for me, right, if let's say I didn't get in over here, let's say I probably got in right here, right? Boom, I entered the market. Remember, I at least want to have at least a 75 pip SL. If I have a 75 pip SL, that puts my SL above this wick here, right, on that doji candlestick. And from that point on, what am I aiming for? My 1-to-1? Or I'm putting myself in a position to aim for that full swing, right? This is swing trading at its finest. And as you see, price is always going to align the proper way. We never got a close above. All we got was wick rejections above. We never got closes above, right? Clean closes above, right? We continuously got bearish candles closing towards the downside. So of course that's where we take the trade to, right? You make your money, you go about your day. Now, let's go and let's start looking at uptrends. All right, let's go start looking at the uptrending markets, okay? Now, we're going to go over it, and we can even go to a whole nother pair just to show you guys that this works through and through. All right, it works through and through. You just have to follow the trend. Follow the trend on the time frame that you're trading on. Follow the trend on the time frame that you mark up on. If I'm looking at this trend right here, of course, the market is moving towards the upside, right? It's consistently doing what? It's consistently taking out structural levels, continuously taking out structural levels, which creates higher highs. And in the midst, it also creates higher lows in the market, right? So now I get my breaker structures to the upside, right? Boom. When price decided to retest, it came back to a structural zone, right? This little pullback here, price pulled back to a structural level, all right? From this candle's wick to the body, boom, structural zone. What ends up happening? You bring out your Fibonacci tool from your relative high or low to your relative high. If we look at this here, price dropped back down to a structural zone, right? And that structural zone aligns with the 382 and the 50%. So all I need to see is a bullish candle close above this zone. That happens, taking my entry all the way to my 0.27, right? Money's made, you go about your day. Now, I see my other relative higher low here. This is my other higher low. Boom, to my relative high, right? What ends up happening? We understand that this is a break of structure, right? We want to see price either come back to the structural zone or beneath it and find an area of value beneath that point. Now, if we look at this, this is the last down candle before price cleanly broke structure. So that becomes an order block. All right. If we look at this level, right, that order block level, what happens here? You get a fake out, price end up closing right back above, right at the 886 and at an order block. What do you think I'm doing? I'm taking this trade towards the upside. SLs are beneath my areas of value, 75 pips. And I'm aiming for at least 75 pips or to my swing point, which is at the 0.27. Right? You see that through and through. Now, are you going to win every single trade? No, you're not going to win every single trade. There are going to be trades that you lose. And if that happens, it was meant to happen. You take that L to the chin, you figure out what you did wrong, and you get better. All right? You figure out what you did wrong, and you get better. If you follow the method and then implement the Fibonacci tool into it, it gives you double confirmation, triple confirmation, whatever you want to call it, right? But you have to understand this is a zero-sum game. So there's a chance that you will lose a trade. Nothing is 100% in the market. So even the best traders in the world, right, are not going to win 100% of their trades. But this is just to show you how you can properly use the Fibonacci tool, right? Use the Fibonacci tool to your advantage. All right. Again, this method works on every single time frame for every single pair. You just have to follow the trend for that time frame, right? And then also take it to a fact that the higher time frames roll off. So with that being said, guys, if you like this video, like, comment, share, right? Subscribe to the channel. I hope that this helps you guys. It's your boy, the Solid Pip Assassin. You can follow me on IG, which is Gary Scott Official. You can email me if you have any questions or concerns at pipassassin20@gmail.com. You can also hit me up on Instagram, ask me the questions that you like, and I'll be more than happy to assist you. That being said, though, it's your boy, Gary Scott, aka Solid Pip Assassin. I'm out. Peace. See you on the next video.